Good evening, everybody. Happy Sunday. It is June the 5th and a beautiful one here in Toronto. I'm your wealth guy. Last week's market finished a little bit in the red, muting the bull market from the week before. What does it mean for this week? What do we hope to see? What do we want to see? Let's talk about it. Let's talk money. Let's talk Sunday night market preview. All right, everybody. So before we get started, thank you very much for tuning into the channel. If you like content like this, please feel free to like, share, subscribe, but most importantly, comment. I really want to hear what you have to say about these markets. But let's talk about the market, because last week we ended up finishing a little bit on the red after we did have a little bit of a rally in the midweek, but ended up pulling back quite significantly on Friday, erasing most of that for the most part, even though the early part of the week was also a little bit in the red. Now, does that mean the markets have pretty well slowed down? The previous week's bull market has come to an end. Is the sky ready to start falling back down? Not necessarily, but here's what we really need to see now this week. Ideally, tomorrow, we really need to see some kind of positive movement to the upside, or at least flat. Even if we finish slightly red, 100, 150 points, that's not enough for me to feel like the uptrend is over. In fact, I think if we get even that slight red, that still indicates that we do have a lot of buyers in the market, generally mostly institutional. But the main thing, as per usual, every week, I've probably said this to exhaustion, is we really need to focus on that 10-year yield and see whether or not we're going to continue to see some upside movement there, because as the 10-year yield goes up, it's just an indication that money is leaving the debt market. Remember, I did mention this last week. This needs to be a controlled movement to the upside. If we see extreme spikes multiple days, that is probably an indication of the opposite. We're probably going to end up having a negative market, or at least it's the indication of a very significant and ugly pullback at that point. So we do need to see some positive momentum there to the upside in the 10-year yield. Ideally, if we get over that 3% yield mark, that is perfect. But this week, we also have inflation numbers coming out. Friday, I believe, is when we'll get US CPI. We do have PMI here in Canada as well. So it is an inflation week. And let's see what those numbers indicate. Now, we've already had Janet Yellen. We've already had the Fed. Everybody has indicated that they anticipate, at least in the short term, that inflation should continue to move to the upside. And I agree pretty well 100% with that. In fact, their admission is a little bit surprising, but long overdue that is exactly what they anticipate. And the truth of the matter, these interest rate bumps, they are not hikes, they're bumps, are actually only moving inflation to the upside at an increased rate. So what are we going to see this week? I imagine we're probably going to see at least the same amount of inflation, if not a slight tick higher. Other things that we're going to have to focus on as well is really GDP, because again, we're really inching towards that recession. I've talked about this before in the past, where although I already feel like the economy, both in the US and Canada, are actually in recessions, I know formally you need to see that GDP shrinkage for 3 consecutive months, and that would pretty well solidify that recession sentiment. Now, as a result of that, the Fed really has a strong decision to make, and that's whether or not quantitative tightening, which I don't believe in whatsoever, will continue. The inflation or the interest rate increases will continue, and they allow recession to take hold or grip the economy, or do they switch and go back to quantitative easing, which is, in truth, what they're always planning to do anyways. And I think that's probably going to be what we're going to see in the coming months. And that's on the assumption that we do formally declare a recession in the US. And if that happens, as I said, you can expect quantitative easing to probably start moving back in. Not that I anticipate really any quantitative tightening whatsoever at this point. But again, so this week is inflation. Let's keep an eye there. We do have jobless claims as well. Last week, the numbers were actually pretty decent, relatively speaking. I'm not going to say that the economy is good because it's far from. I already just said that it is in a recession. And even though those numbers are better than was anticipated, they are still far from actually being good. And in fact, U.S. unemployment did tick up slightly last week. So this week, as I mentioned, what I anticipate is what I'm hoping is that tomorrow, when the markets open and when they close, we're going to be close to being in the green, ideally in the green and some kind of rally, or even a slight red, and then a rally on Tuesday. That'll be a very positive sign for the market, and it indicates that the buying momentum is still quite significant in this market, able to keep it above key levels, because last week we did dip again at those or just below those key levels. But let's have a look at cryptocurrency really quickly. I'm not really going to get too deep because I want to be able to do multiple videos this week. Cryptocurrency has been trading in a very tight channel since pretty well May 11th or so, after the previous dip from about 40,000 down. It's been trading pretty well in that 28,000 to roughly 32 on the high. But for the most part, it's actually been even tighter if we take a look at the charts. And I will start adding charts to these videos soon. Really, we're looking at about 31.5 on the high to about 29,000 for the most part. So it's in that tight range, and I don't really expect it to move out of that until we see some kind of dramatic move in the market. When we do, we will certainly start to see that in cryptocurrency as well. And again, that was just the Bitcoin chart. Looking at precious metals this week, I think precious metals does have the potential to move to the upside again this week, but nothing quite as significant as it did about 2 weeks ago. We did see a little bit of a negative on Friday, which pulled down gold, I believe, about $14. So that is a little bit of a pullback, but still sitting in the mid to high 1800s, which is a great number for gold to be at currently. If it doesn't drop down to 1800, that's a very positive sign, and it does show continued strength, especially as we approach this potential recession. The other area I want to focus on is crude and energy, which have done absolutely phenomenal. Crude is currently up at the $120 mark, or at least West Texas is. I'm just going to pull up the chart here so we can have a quick look. But West Texas, I anticipate, will continue to move to the upside. It's not going to be a smooth ride. It's not going to go straight up to 130 or 140. However, I do anticipate that 130 will be hit very, very soon. And at the same time, I wouldn't be surprised if we see 150 by the end of the summer. Crude is currently sitting at, or West Texas is currently sitting at just shy of 121 and a quarter. It's at 120 and a quarter. My apologies there. So I do anticipate crude is going to continue to move to the upside. Sorry to everybody out there. I've got a truck as well, which isn't very fun to fill up at the pumps, but you could always take a look at energy, in particular crude, as well as any related industry. For the medium term, the short to medium term, that's exactly where I'm looking personally. Not a recommendation, just something that I'm doing here as I anticipate crude continues to move to the upside, along with natural gas and other areas in the energy sector. But that's pretty much it for this week. So just to recap real quick, I am looking for crude to continue to move to the upside. I'm looking for that 10-year yield to continue to move to the upside. Looking for a little bit of a pullback on the US dollar here. I would love to see, if not a rally tomorrow, not a deep negative, that's for sure. A sell-off would be problematic for the market. However, if we don't get the run-up tomorrow, I would love to see it on Tuesday at the very least. If we do get that, we probably will finish the week off in the positive. If not, it's highly likely that the markets will continue to slide slightly to the downside. After all, there are a lot of institutional buyers at these levels. But that's it, everybody. I will see you tomorrow morning at the opening bell.